Hello, it's Richard Bowser from Property Investor News. And tonight I'm in central London and I've come across a very familiar face in John Corey. Good evening, John.
Evening.
John, we're at your monthly property meeting, the London Real Estate Meet.
That's correct, yes. 15 years last April.
Wow. Time flies.
I used to look a little younger, yes.
You're not alone. So, John, you just come back from the US and you were telling me that you went along to a few real estate meetings out in the US and picked up one or two things that we might be explaining to readers of Property Investor News. Just a little bit about what you picked up over there, and what people are doing.
So the people understand. So I started real estate investing in San Jose, California, 1983, so I think 36 years ago. And I've been doing a lot of things in the UK for quite a number of years now. So I was going back this trip to spend some time at different property meets to see what's going on in the US market. And it was a little bit of a culture shock at some level of like, okay, that I understand, that's new. And it was fun, you know, learning new things. And I was in the Philadelphia area, and there was some really interesting bargains and some really inexpensive deals.
Yes.
It has its own sort of unique characteristics.
Yes.
But one of the things that's new since I left is the way that the U.S. is implementing crowdfunding. It's actually not done very much like it is here in the U.K. In a large extent, I would say the FCA and the UK have led on this, and the SEC is a little behind the curve. But they also have opened up things to private advertising for syndicates with accredited investors, which in the UK language would be only high net worth.
High net worth, yes.
But it would be high net worth that's really much higher than we would generally think of here. So the minimum standard there is a good bit higher. And you can actually do quite a bit of publicity and attracting people. So social media plays into this quite well.
Yes.
And coincidentally, when I was coming back, I was planning to attend and did go to the 10X conference,
Yes.
which has Grant Cardone as the property speaker, along with the other folks from Progressive and Nick James and his team. And so I was looking at Grant's SEC filings. So in the US, the SEC is like the FCA.
Yes.
And Grant has a number of different filings for the different raises he's been doing. And he's been really working the social media quite effectively. So he's built basically somewhere between $800 million and I think it's 3, depending on which day we count, because he's closing a bunch of deals. But a very large apartment portfolio, 7,000 units.
Right. So it's residential.
It's an asset class we don't have in the UK. It looks and feels economically like commercial. But it has residential use. So it is an apartment, but it cannot be broken up like leases. So the closest thing would be student housing here, purpose-built. So you buy and sell whole blocks for the cash flow. And he's able to raise equity at around 6%. So yeah, he's really sort of working it. And, and I think there's a lot of room to do more.
And this is across the US in different regional markets even?
He tends to be southeast. Florida through, maybe Texas and a few other places. You could look it up online, but I know other people who only operate below a certain parallel, in the sense of parallels across, and then others only work in certain cities. So there's a lot of syndicators doing deals out there.
Interesting. And you mentioned earlier about the Philadelphia area and relatively low value property income related investment. How much appetite is there? Obviously, we've got parts of the UK where there are areas that have not seen the sort of capital growth in the last 10 years that London has had. Are we talking about comparable type areas?
So Philadelphia is the 5th largest city, but it has areas that might feel like what we would call up north or in certain parts of Wales.
Yes.
So there was a property that a person was talking about, 800 square foot house over 2 floors plus a basement.
Yeah.
And they were able to buy it for $70,000. They were estimating the repairs would cost a certain amount, and I think they would be all in at, say, $180,000 if I remember right, and it would be worth $250,000.
Wow.
So they were looking to, in a sense, flip it to someone else without doing the work.
Okay.
The term would be wholesaling in the US for that. So it was it was quite interesting that people were really out there hustling, finding deals, so what we might call sourcing, but they're actually getting them under contract, and they sell the contract.
Right.
So it keeps it legal from an agency point of view. And people are making 10, 20,000 on some of these deals. And I thought, well, they're making good money.
Yes.
And we did a deal clinic, and the people who were on the panel at the deal clinic plus the audience, and the panel, there are people making $250,000 a year, basically working certain neighborhoods.
Yes.
They know their patch,
Yep.
they know their numbers, they can do their comparables, and boom, boom, boom.
Excellent. Well, there we are. That's John Corey, very much giving us a snapshot update of what's happening out in the US real estate property market, and particularly Philadelphia, but also talking about what's happening in the US in terms of funding larger apartment block schemes. John, that was really interesting. Thanks for your time on that.
Thank you.
So Richard Bowser, Property Investor News with John Corey of Property Fortress at the London Real Estate Meet. Thank you, John.
Thank you.